because it's not something that can be condensed into a 10-minute video like a lot of people want. 15-minute, 20-minute video where you're like, all right, here it is. Here's the quick new trick. All you want to find is the inducement low. You want to hit the low through, get to the zone, you get the zone, get the go, identify your range, buy here, sell high, buy low. Makes no sense. And it sounds fun if I made videos like that, but it wouldn't actually teach you anything. Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Okay, what's going on, everybody? Welcome back to the mentfx public YouTube channel. Today, what I'm going to be doing is I'm going to be talking about specifically, and this is something I taught recently in the private mentorship. I'm going to be talking about the blueprint to price. I'm going to be talking about what you should look for in regards to very, very good setups and how you can start getting involved in some of the best setups and actually be on the right side of trend. So before I go further, what I want to do is I want to bring your attention to a mentfunding individual that just got funded with mentfunding. This is his evaluation account. He's just made $20,000 on that evaluation account from around 6/11 until 6/21, so about 10 days. And again, we have no time limit, so the fact that he did it in 10 days is great, but he could have taken a year if he needed to. So he made that 20K and he's just passed the funded account, and parts of some of the winning trades he had go hand in hand with what I'm about to teach today. So if we go down here and we look at some of his larger trades, so he has some smaller wins, some smaller losses, so you can tell there's really good management here, but then you have the outlier wins. You have an 11K win here, you have an 11K win here, but you'll also notice that they're all on the same volume, right, as the other trades. So there's nothing that's like out of the blue where he just decided to gamble on these ones and was trading differently on the others. I don't know what system he even used, but what I can tell you is that the ones that he made the most money on were on Euro US dollar buys and on GBP JPY longs. And as a lot of you might know, over the course of this channel, over the course of every single video I've made available to you guys publicly, and of course for those of you that are private, I mean, I don't even have to talk about it, but you all know how we've been following UJ, GJ to the long side, EU to the long side. You know that it's been a market that's been delivering very, very beautifully to the bullish side. Now, many people are again stuck on the wrong side. Many people have been trying to short EU ever since it was around these areas, and as we continue to look for it to continue going higher, most people are looking to still short this thing. Similarly, for GJ and UJ, most people, I don't know why, are still trying to short this thing. We've been long on this thing ever since prices began to break in or around these areas here to the top side and started to put in clear SSC models long, and as a result have begun their trending models for delivery, right, that have given us the opportunity to get involved using our MA trading and trending based systems. But what I want to bring your attention to before we talk any further today is that this member, again, I don't think he's one of my students, but because you can see he has some sells on GJ as well, some sells here and there. But what's interesting is his best trades on this entire account were only his best trades, the ones that hit that 10K plus mark, were only the ones that were going with the side of the price that we've been sharing over and over and over again on this channel. In his best trades, right? So the ones that were against had some wins, some losses, some wins, some losses, but the major ones were always with the trend. So one thing that I want you to take away just from this video and just from this little section alone is that if you can keep yourself on the correct side of trend and trade with that, those small wins that you might get against trend are not really necessary. What matters is the beautiful systems that come when you're with that trend, right? And stuff like this is what's going to happen as a result. You're going to find yourself getting funded a lot faster with many firms as you wish, with mentfunding too, and then getting your payouts so you can actually transition to doing this thing full time. Now, let's talk about the things that led to this kind of bullishness and why we've been bullish on this and why we remain bullish on this and how you yourself can utilize what is taught on this channel to go ahead and build out a very, very clean and powerful system for yourself. So, very quickly, let's talk about where we began to go long on EU, why we began going long on it, and why we still anticipate the run on longs, and we will continue following this into the coming weeks. So first and foremost, ever since price tapped into this higher time frame SND, so that's as part of our SSC system that I teach here on this channel as well as privately, which came directly from this daily leg. So let me show you guys this. So As per this daily leg in relation to the previous S&D 2.0s, so I've taught this on my channel as well. This is known as the S&D 2.0 system, where basically price I got involved prior, where they sold to buy like very heavily, and whatever happened after that leaves behind a zone. Price retaps into that zone, creates a new zone off of it, and as that's created, 2.0s are created off of any occurring zone, right? What's occurring is those last points of mitigation are being held up by big money interest. We don't know, you don't have to call it smart money or banks or whatever the fuck. It doesn't really matter. All you need to understand is that big money interest is holding this price up because there's no reason for them to go below it, or it becomes so discounted, so it might absorb that it'll get bought right back up. That's when you see wicks like this into it. And if you follow these 2.0s of a given direction, you can get involved in, and you can pretty much predict exactly where prices are going to reaccumulate and continue from. So that's going hand in hand with the reaccumulation model that I've taught on this channel as well in the past few videos. So again, if you just follow these 2.0s ever since right here, so ever since this unmitigated point was left behind and price tapped in and created a new S&D 2.0, so if you follow that new down move, you can notice it got mitigated, so you can follow that to its next move. You can see that got mitigated. You can follow that to its next move. You can see it got mitigated. You can follow that to its next move, right? You can see it all gets mitigated. You can follow it to its next move. Here's where price gets into a very discounted level of that S&D, comes right through, it gets bought up instantly, thereby creating a new 2.0 shown by this large zone right here. So that's where this 2.0 comes from, which we further refined within the mentorship, and I taught you guys this on the public channel as well, to this last down move before the up move. Prices came, we were long here as a team over and over and over again, and followed these longs beautifully to clear this high right here as part of a reaccumulation model off of a 3-day S&D. So right here off this 3-day, we had the SSC. So I've taught this on my channel already, so go back in my videos and you can see this. This SSC is what we traded, right? We'll go back to the daily here. If we keep following this 2.0, you can see the next down move gets mitigated, so we can keep following these candles, right? Next down move gets mitigated, so we can keep following that candle. Next down move gets mitigated, so we can keep following that candle. And what you get to, sorry about that, what you get to is you get to this last point where price had left an unmitigated portion, thereby leaving behind an unmitigated zone in effect of the S&D 2.0 rule. So if we follow all S&D 2.0s for really what occurred here, this is what we're technically looking at, right? Just to give you guys a little bit of an understanding behind what it is that we're looking at. There we go. Okay, so this is the 2.0 chain that is currently being built up from a demand perspective of this bullish market. And how do we also know that it's bullish, right? Why is it that we're looking at these demand chains, as we would call them, instead of, for instance, some of the supply chains that might be going on up here? Well, because of the contextual framework of this market. And that contextual framework has been taught over and over and over again within my webinars. So if you want a really in-depth approach, you can find that within the private mentorship. But to give you a quick understanding, one is due to the fact that we've shifted bullish on the weekly. And as we shift bullish and the first SSC has been made bullish, we already anticipate bullish delivery. Secondly, the 3-day has continued to shift and continues to shift bullish. So the SSCs that are currently delivering on the 3-day are all pointing long. So there's no reason for us to assume anything else, which is why we continue to assume this as the next move, right? And that can be disproven, but at the moment, that's all it's been showing. That's all I've been teaching you guys over and over and over again. Here on the daily now, as we go into it, as I taught in the last few videos, we had protected lows rising higher and higher and higher, and then had them broken down. This is where that break occurred. And that break occurred as it tapped into the prior 2.0s, as well as those 3-day SSCs. And when this occurs, again, because we understand, and as I've taught you multiple times, prices do not move in this fashion, as many people like to teach you, and then they have their little chicky flippies and start going short. Instead, what I've taught you to understand is that as they shift lower, those are actually parts of moving markets to the top side. So this is likely to now occur as something like this. And that's exactly what you see happen here, right? The market reverts to its bullish pushes. So it comes in, reverts to its bullish push, makes a new run on this, thereby putting in a new 3-day SSC. And from there, as we keep following these 2.0 chains, as in the last possible unmitigated areas that are being bought up, the area that I made clear to my team recently was this guy right here, which is the last, once again, as we just followed that chain. So I'm going to delete all these because they're no longer important. As we follow that chain from all the way over here, in context with the SSCs, with the higher time frames, with the SSCs of the higher time frames, with the deliveries of the higher time frames, you get to this last point right here, the last unmitigated S&D 2.0 created by the previous chain of S&D 2.0s. And as price taps into there, what we then undergo is what we call an accumulation model in the mentfx methodology. This is not random phases of the market. This isn't like, oh, we did the SC, we did the Wyckoff thing. It's a lot deeper than that, and it's to do with the actual framework of how the structure delivers. This is in line with the way that we teach our left to right structure. Now, these boxes you see around price, these are the structure rules that I teach my private mentorship, and you also have it available for free on TradingView through mentfx structure right here. You can go ahead and put that on if you'd like. That's no problem. Let me close my door for 1 second, guys. Okay, I apologize. So, you can put this on, and these are rules that I teach, and these aren't like some insane things that you can't figure out. These are the specific rules I teach. I just had it coded for myself and my team, and also for a lot of you that may want to use it to see those ranges, because it's a very good way to define what models you're likely in. So what you have here is, as price taps into this higher time frame SSC, or in this case, this S&D 2.0, as we just taught, because that's part of that 2.0 chain, you now have a market that's already begun to show you bullishness coming in. Now, this is something that a lot of people don't teach in the space. A lot of people just teach you to wait for price to come in and make the little mitigation move, and then now you're good to go. But this is not how prices move, and you're playing a guessing game if you're trying to trade like this, and you're just trying to, just predict any kind of break to be the true break or whatever it is. You need to understand the fundamental movements of the market, right? It's not always going to be the same. It's as I teach it, it's always going to be a snowflake. It's going to be delivering in a few different ways. But the way that I teach is that as prices undergo these breaks to the top side and continuations down, those are redistribution models. And that happens a few times. And here you can see it breaks up, starts re-breaking down, re-breaks up, re-breaks down. What it's now showing you is that a market, in this case on the 1 hour, has undergone multiple redistributions. So it's broken up within multiple breaks down, it's broken up once or twice and continued breaking down, and it's done that multiple times. When that happens, the odds of an accumulation become significantly higher. So if you can synergize the odds of that accumulation becoming higher with higher timeframe S&D 2.0s or SSCs and the contextual frameworks of higher timeframe SSCs and their given models, as I've been teaching recently on this channel, then you give yourself a very good chance of being able to understand when the market is ripe for potential entries. And you can see some of my first entries were only taken around here, right? So I let all of this undergo before I even started getting involved, and now I'm getting involved to take this thing long, and hopefully we'll be able to continue doing so. And the beautiful thing about what we do is that when and if this invalidates to start going short, if it wants to do that, it'll be a market that we're able to walk away from, because as you're going to learn through this channel here, we do not show up every day just like, okay, where's the next trade? What are we mitigating, right? We don't walk into any day and go, okay, here we are on the daily. Clearly we're hitting this supply zone, so we should watch for a move down into probably the clear of this imbalance. Maybe we take out these equal lows, and maybe this imbalance, and here we go. Let's make it happen. Where's my first, change of character? There it is. Okay, let me get short right here. Easy does it. When you show up every day doing that, you're already focusing on the mentality that is forcing you to go short at areas where you should be theoretically going long. And there might not be a long available, but there's almost always a short available. One of the examples I've been using recently, because I recently had a student that came from other mentorships to me, is this idea of like discount premium and all this fun stuff. Do not get confused or do not get swamped up by that kind of thought process. Let me tell you about why. Very simply, for a lot of you that might be new, this idea of discount premium is taught by a number of mentorships where basically you find a range, and very simply what they teach you is they tell you want to, let me actually put on the 0 and the 1 for you. And what they say is you basically, let's do no background. They say basically you want to be a seller in these areas and a buyer in these areas. Now, it might look good on paper and it can look very good in hindsight, but the big problem behind doing things like this is that you never know when this range has actually completed or is complete, which means that anytime you give yourself this box of an area where you should sell in a bullish market, you're almost always going to be on the wrong side, because no matter where you draw it, prices will continue to go through until true reversal. So this goes back to the original thing that I love to say, which is, would you rather be wrong only once at the end of a trend? So like I'm bullish right now, I've been bullish since here and it's continuing to deliver, or do you want to be wrong over and over and over again until you can finally predict one of these things right? So something that a lot of people need to understand is that this way of thinking is getting in the way, right? I had to undo a lot of things that this member had learned, because this was affecting them in a very big and negative way because many people, like I just said, are already in that realm, right? On this initial push, they're going, okay, here we go, right? We made the push. We need to be sellers inside of here. Here, you can look at this on a lower time frame, maybe even a 1 hour, okay? Their initial idea is we need to be sellers inside of here so we can be buyers inside of here. And what do you see? They get liquidated, right? And then it continues. We should be sellers inside of here to get to be buyers. We need to be sellers inside of here to get to be buyers. And this will work whether you're smart money or retail, right? Because retail is also looking to force the hits of whatever support resistance is up here to get back into the 61.8% retracements and stuff like that. So very quickly, I hope a lot of you are seeing firsthand and maybe even seeing the issues that you've had within yourself when it comes to trying to predict the tops. A lot of the concepts that are being taught to you, right, whether it be along those lines, right, or along the pullback lines, is that you're consistently finding yourself on the wrong side because the at-hand models are screaming a certain thing at you. And when those things begin to play out, the odds of actual pullback become very, very small, but you are still within the mentality that you need to see that pullback. So as I just said, what happens is no matter where you define this range now, right, here it is, eventually you're going to be correct, right? But now, again, most smart money or retail is looking at this and going, okay, this is the area within which I want to sell, right? This is the range within which I need to see sell, so then I can buy. And again, as the likelihood of this market suggests, it's going to continue to liquidate them. So you don't want to find yourself on that side of price. So instead, the question becomes, how do I find myself on the trending side of price? And that's what I'm delivering to you today, which is the blueprint of the market. And that blueprint, very simply, something that I can tell you that you can take with yourself today, is identify higher time frame SSC in regards to where price is moving without it needing to pull back. So identify the break, and without prices ever coming back, assume that price wants to continue up and through, or maybe make a pullback and then continue up and through. Nothing more. Do not start forcing the shorts. And now instead, what I want you to do is on lower time frames, allow the models to show you that, whether through accumulation or reaccumulation in the case that you're going long. So, you know, building up like this, breaking down and assuming long to get these kind of moves going forward. Breaking, let's say, down multiple times, right? Breaking up, breaking down, and now as it breaks up, you assume longs, and hopefully you then get the SSCs to go long, and or you get your trending-based methodologies to go long. This is where money is made, because at these points, what you have is you have the retail traders, the smart money traders, the bank traders, the hedge traders, the people that are consistently trying to average into the market. And again, when I say that, averaging in is something that hedge funds, institutions of the highest order do, or of mid-size, and that's why a lot of them collapse because of things like this. And when the true move starts, and as true moves start, this is where those liquidations occur, because every person in their right mind, regardless of what system they've learned or are learning, are looking for the reasons to go short, whether it be through ranges like this, or like this, or like this, or this, or now we're at this high, so now this, and they want to see the shorts down, whether it be the now break and retest, so they need to see it retest here or wherever else. They have this inability to understand they've entered a trending market. So how do you identify that you've entered that trending market? Well, as I just said, here's a higher time frame that's showing to you straight bullishness. It's been screaming bullishness at you for a long time. And since then, the daily has done what I've taught you guys publicly on this channel, which is reaccumulated multiple times. Went higher, 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 broke down into those 2.0s, went higher, 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 made a new 2.0. And again, as it breaks short here, again, many people are seeing this as a structural leg short and want to go short. Makes no sense. It might work, but it makes no sense, which is why for months now, even in my mentorship, I've been teaching people to watch for this exact thing, and many people are now milking this side of the market right here. Now, again, just because they're doing it doesn't mean you can do it, but hopefully you're learning a little bit something from my perspective. This is for educational purposes only, after all, okay? So here's that 2.0. So you're getting a lot of concepts thrown at you here, and I hope you see why I've started a mentorship, and I talk about this week after week through over 2.5 hours per week, because it's not something that can be condensed into a 10-minute video like a lot of people want, 15-minute, 20-minute video where you're like, all right, here it is. Here's the quick new trick. All you want to find is the inducement low. You want to hit the low through, get to the zone, you get the zone, get the go, identify your range, buy here, sell high, buy low. Makes no sense. And it sounds fun if I made videos like that, but it wouldn't actually teach you anything. So instead, you have these long form pieces of content on here throughout my entire public and in the private to teach you those things. But again, they're overloaded with a lot of information. Well, because we use a lot of information in trading, right? We develop our understanding through tools, and there's a lot of experience behind it. And I'm teaching you how to do that firsthand. So hopefully those of you that are still here right now watching this, you are learning to do that, okay? So this is the reason this zone was selected was for the 2.0 reasons, and we didn't know if price was going to stop here or not. But this is where our models and understanding of models comes in handy. So here on the daily, we know that we're already building higher lows, or as we can call it, higher protected lows over and over and over again. So when these break down, we don't instantly look at this breakdown as a bearish sign. It might mean that we step away and we wait for a few more confirmations about where price wants to go, but it does not mean it's a bearish sign, especially when the entire market has already been telling you where it wants to go, which has been long. And hopefully, for those of you that have been watching my channel for a while, you notice that I've been saying this thing is going to be going long forever. I've been screaming and I'm like, this thing's long. And again, every week you see people going extremely short on this and taking losses nonstop. The only places that people that are going short are finding some bit of success is in areas like this. And even then, it's almost impossible. Unless you're trading sub 1 minute charts or 5 minute charts, sub 5 minute charts, you cannot find success, or you cannot really find immense success trying to consistently go against the trend, which is what most people are teaching you to do and what most people are doing. And even when you're involved on some of these lower timeframes on these areas, you can even take a quick look and see how wicky this price action gets, which very clearly means what? That means that no matter where you get entered, the odds of break even, loss, or getting stopped out instantly are actually much higher, even though you might be successful. So try to disconnect from this way of thinking in necessary pullbacks, right? It's affecting you in a very negative way, even if you don't notice it now, and start thinking in models and what is the market screaming at me, and then how do I get involved as a result of that, which is why I've been teaching and have started teaching this MA system that I've been testing for over 8 months plus now, and teach it as part of the fundamental course in my mentorship now and here publicly on YouTube, because and I love making this thing free and available to all of you, because hopefully you take this, you learn from it, and you go get funded with mentfunding, just like a lot of our other traders do, because it's an amazing thing to happen, and I get to basically profit off of your ability to take something in, experience it, learn it, and then utilize it. I think it's a beautiful little ecosystem. So for any of you that are here and wondering, why the fuck does this guy do all this? This is one of the reasons. So back to this, again, very quickly, daily is showcasing reaccumulation. Higher lows, break down, we instantly assume reaccumulation. And notice how you can see this is the high I want to see cleared. It's as simple as that. And do you think that as this high gets cleared, I expect it to just clear and then go short? Or do you think I expect this to blow up through it? Of course, I expect it to blow up through it, because as SSCs deliver, they basically go what we call parabolic. They move away, right? They don't come back anymore. But that's beautiful, because that gives you opportunities now on either lower timeframes or through trending-based methodologies, which is what I'm teaching you right now. So everything's pointing bullish. This has come back to a 2.0, or the most recent 2.0 off of the 2.0 chain that's been built up. And I have stuff on 2.0s taught on this channel. But again, as always, all depth is in the mentorship. No shit. So as price comes in here and begins to break long, what you're seeing is the first bit of orders that are displacing prices to the top side, right? That's what you're seeing as it starts redistributing over and over again into an area. And as it's in that area, prices could have very easily done this. And I wouldn't have taken any losses. It would have been nothing off my chin, off my shoulder, whatever. It doesn't matter, because I'm still not looking for involvement, because I understand that I'm looking for a set bit of principles to occur before I'm looking to get involved in anything, right? This is something that people don't understand. Zones are not there to hold and succeed, okay? A lot of people don't understand this, but I teach this all the time. Zones are there to tell you what the money is doing and what the models at hand are doing. And sometimes those zones will hold and sometimes they won't. And when they do hold and they start putting in the models that you're looking for, that's when you're going to get opportunities across multiple timeframes to get involved and start getting involved across everything. And if you're someone on the trend following side, what you're also going to have is you're going to have the ability now to scale your system, not just from a 15 second, 1 second to a 1 minute, but scale it beyond that to 15 minute, 1 hour, 4 hour, daily, weekly charts if you need to, especially if you start hitting some of those larger numbers. The only time your little corrective nature trading works, where you try to predict every little mitigation it's having, is if you're trading the sub 1 minute chart. So it can be profitable, but you need to be very, very careful in regards to scaling, because it's very hard to scale a system where you're consistently finding yourself on the wrong side. And as a lot of you might know, most people find themselves on the wrong side, and this is one of those main reasons as to why. Because no matter what thought process you're thinking under, whether it be retail, smart money, or any of this fun stuff, every single one is rooted in this necessary pullback. And as a result, this mean reversion. And as a result, you're constantly on the wrong side. You need to understand the fundamental movings of the market. What does that blueprint look like? And once that blueprint is there, if you're not positioned, then you either need a system that can get you positioned with the trending method or with the trend right? Or you need to be able to walk away. And that's where a lot of people go wrong. So for instance, these opportunities right here and here, as it starts this move upwards, is where the SSCs, where you have the major pullbacks into a zone to go, are going to work the best, okay? But past that, as the money comes in and starts to basically, at what you could call parabolic itself up, to just move, because now it's just liquidating people that are going short until it takes and continues going. Well, you need a way to get involved and you need to understand how that's happening. So back to this 1 hour, right? As you're getting these redistributions, up, down, as it starts breaking long again and is coming from a higher time frame zone with an overall assessment about where prices want to head, so in this case bullish off that higher time frame, well, now it's screaming what it wants to do to you. And oftentimes after, so you can write this down now if you're still watching, after 1 to 3 SSCs, sometimes none at all, but usually after 1 to 3 clear SSCs where price goes, comes back to an area and goes, it's not coming back again. It's going to enter a full trending environment, right? Where it's just going to gap, pull back to, in this case, what I'm teaching you, the 10, 20, or 50 MA, go sideways, basically reaccumulate along those MAs, get bought up extremely heavily by smart interest, by big money, and continue gapping upwards. And that's where you can build out an edge where you can make, you know, these amazing trades across all time frames. So when you go for something like a $2 million mentfunding account, or for max allocation with, you know, the funded trader and a bunch of these other prop firms, you're actually able to utilize that capital and you're not consistently stuck. You're on like this 5-second chart trying to just fucking predict that pullback until it fucking works eventually. Like, come on, where's my pullback? I've drawn, you know, my 50% range 15,000 times. Why isn't it? Well, stop doing the thing that most people are doing. There's a reason it's not happening, right? It goes back to the thing I said, where like if you zoom in and you just look at price, anytime you look at price, the side of the screen that price is on is likely the side that price is going to keep going in. Many people look at it, they're like, oh, sorry, short time, oh, short time, oh, short time, oh, short, fuck, right? It's not the way that I judge trend at all, but it's a good start because a lot of people, including you, hopefully, the person watching this, could be making this same mistake. So don't make it anymore. Okay, so back to this thing very quickly. I'm gonna wrap this thing up. On the 1 hour here, we made a few breaks up. We come back, we start making the SSC mitigations from the prior SSCs. Okay, and we make a few more inside of here from the higher time frame as well as this time frame. We absorb some, we hit some, and then money comes in. At this point, if you didn't get involved here, you've entered what we call a trending based environment. What that means now is that the best kind of opportunities are actually going to be the ones that surf the MAs, as we like to call them. So this is where across all time frames, what you want to look for is for money to come in and move itself almost parabolically away from price, pull back, make a literally a accumulation zone, a reaccumulation zone, a tight range as it surfs higher through the averages and continue higher. You can build a full system around that. So if I just show you some of these setups right here, I took this trade right here on a 15-minute. Take a look at what the principles for that trade were, right? Prices and heavy money came in off of what appears to be a reaccumulation model. So again, there's a lot of lines here. Don't get too taken away by them. All it is you can see the higher lows, price breaks down. Again, what should you be expecting when that happens? The rebreaks higher, because it's a reaccumulation model happening within a contextual element of this market. Prices make a big move, money starts coming in, a few SSCs already occur. So after 1 to 3 SSCs, what does that usually mean? The price is ready for a trending markup. And as we get that money to come in, start surfing. You can see in this case the 10 and 20 MA, making higher lows on average from an intermediary perspective and getting tight across the top, thereby giving you a clear area to break out. That's where I bought my breakout. And that's where I took it higher, managed it accordingly. I teach my management rules, my mentorship, and then got stopped out up here. Well, I exited off the close under the 10. So that was it. Then again, off a higher time frame, I missed this trade, all good. I took this one here off a lower time frame. So again, I'm showing you guys firsthand that this happens on all time frames. And I took this trade this week on a 2-hour and a 4-hour basis because this happens on all time frames. So money comes in. Clearly, you can see parabolic money coming in. The money is showing you where it wants to move, and it's showing you that within an overall SSC, aka wants to run this high, within an overall higher time frame that it's moving from, within the accumulation models that I talk about, within the clear reaccumulations that it's moving in as well. So prices made that big move, pulled back to the 10, 20, or 50. In this case, you can see it kind of made it to the 50, started putting in higher lows across that 50, whether you draw it from here or from here, it doesn't matter. A lot of people need to realize that we don't sit here making random names like, this is your wedge pattern, triangle, dupli pattern, because that's not what we look for. We don't look for patterns, we look for the fundamentals behind price movement. And one of these big fundamentals is trending-based environments and what they do. When you're in trending-based environments, and if you can identify trend, structure, direction, and that trending-based environment, in this case, basically the blueprint of what you're seeing right here, and what I teach in webinar 100 and onwards from the mentorship, for any of you that do join up and want to see like everything right now, that's where you'll see it. You have this trending higher, being bought up at this 50 MA in this case, making higher lows across here and here. Either one doesn't matter. And across the top, you start making a clean, tight range, whether you draw it a little bit deeper right here and you buy this breakout, or if you draw it here as I did and buy this breakout. And that's the breakout I bought personally. And as I bought this, I got to manage it accordingly, again, using my management rules, and I exited on the close of, I believe, this candle right here. I exited right there off the full position, and I took a partial on the way up inside of there. So the partial and the full position closure was around the same area. And now very simply, hopefully, you can see what price is doing, right? Doing the same thing, and it's just broken down. What should your instant expectation be? The price wants to do this. Has money come in for that to happen yet? No, not at all. It's going to show you that it wants to do that. It's going to start surfing one of these MAs again as per its trending environment, or it's going to create a bigger reaccumulation and then start its move here, in which case we'll get even more opportunities in the coming weeks. But the thing I want to talk about today is that if you're trying to build for yourself a profitable system that you can actually scale long-term, you need to disconnect from a lot of the ways that you're being taught to think in regards to forcing these pullbacks, looking for the fib ratios, looking for like the kind of the discount premium thing, unless you're taught to do this properly. Although trying to do this, because I used to do this back in the day, and again, I experienced the exact same mistakes that I see happening now. And when I have these one-on-ones with people, or I talk to members, I need to almost like I need to pull them apart. Is it like they're like a mummy? I'm like, okay, take this part off. You need to rebandage this thing properly. Like, this is terrible, right? Your body's not going to be preserved if you're wrapped up like this. And the reason for that is because what you don't realize is that, let's say if price does start going down here, finally your little range works, right? This is my selling area, and finally, you get your sell into the buy. But what you don't remember, in hindsight, it's going to look very beautiful, but what you don't remember is that during this whole time, prices never, ever did that with any of the actual ranges, and you just were on the wrong side the whole time. So do not be the puppet, right? The person that is just constantly like, oh, come on, they're long, I'm hitting the weekly zone, the daily zone, the 4-hour zone. Instead, ask yourself, what is the model of the market telling me from a left-right perspective? Is money coming into that given side? If it is, have we entered a potentially trending-based environment? And if we have, what are the opportunities that are now available to me if I didn't get involved through SSC? And hopefully, with a little bit of the previous video as well as this video, you've learned a little bit more about how to do that, and you can continue to improve. All right, thank you so much for watching, and I'll see you all in the next video. Bye, guys.